Financial liquidity. Consider all of the assets you own. Some things you own, such as nicest shirt or food in your refrigerator, might be able to sold quickly. Others, such as rare collectible coin or custom painting of your family, may be a bit more difficult. The relative ease in which things can be bought or sold is referred to as liquidity. Financial liquidity impacts individuals, companies, and financial markets. As each group attempts to buy and sell things, it's crucial to understand what financial liquidity is, how to measure it, and why it is important. Assets like stock and bonds are very liquid since they can be converted to cash within days. However, large assets such as property, plant, and equipment are not as easily converted to cash. For example, your checking account is liquid, but if you own land and needed to sell it, it may take weeks or months to liquidate it, making it less liquid. Before investing in any asset, it's important to keep in mind the asset liquidity level since it could be difficult or take time to convert back into cash. Of course, other than selling an asset, cash can be obtained by borrowing against an asset. For example, banks lend money to companies, taking the company's asset as collateral to protect the bank from a default. The company receives cash but must pay back the original loan amount plus interest to the bank. Financial liquidity by asset class. Cash is the most liquid asset, and companies may also hold very short-term investments that are considered cash equivalent that are also extremely liquid. Companies often have other short-term receivables that may be converted to cash quickly. Unsold inventory on hand is often converted to money during the normal course of operation. Companies may also have obligations due from customers they have issued a credit to. Some investments are easily converted to cash like public stock and bonds. Since stock and bonds have public exchange with continual pricing, they are often referred to as liquid assets. Other investment assets that take longer to convert to cash might include preferred or restricted shares, which usually have covenants dictating how and when they can be sold. In addition, specific type of investment may not have robust market or a large group of interest investors to acquire the investment. Consider private shares of stock that cannot easily be exchanged by logging into your online brokerage account. Coins, stamp, art, and other collectibles are less liquid than cash if the investor wants full value for the item. For example, if an investor was to sell to another collector, they might get full value if they wait for the right buyer. However, because of the specialized market for collectibles, it might take time to match the right buyer to the right seller. Land, real estate, or buildings are considered among the least liquid assets because it could take weeks or months to sell them. Fixed assets often entail a lengthy sale process inclusive of legal documents and reporting requirements. Compared to public stock that can often be sold in an instant, this type of assets simply take longer and are illiquid. As of April 30, 2022, 12.7 million shares of Class A GameStop shares had been directly registered with the company's transfer agent. The act of directly registering shares through Computershare effectively reduced the liquidity of the company's stock as shares held by exchange could not as easily be loaned out. Liquidity in the market. Market liquidity refers to a market's ability to allow assets to be bought and sold easily and quickly, such as a country's financial market or real estate market. The market for a stock is liquid if its share can be quickly bought and sold and the trade has little impact on the stock's price. Company stock traded on the major exchange are typically considered liquid. If an exchange has a high volume of trade, the price a buyer offers per share and the price the seller is willing to accept should be close to each other. In other words, the buyer would not have to pay more to buy the stock and will be able to liquidate it easily. When the spread between the bid and ask prices widen, the market becomes more illiquid. For illiquid stock, the spread can be much wider, amounting to a few percentage points of the trading prices. The time of day is important too. If you are trading stocks or investment after hours, there may be fewer market participants. Also, if you are trading an overseas instrument like currencies, liquidity might be less for the euro during, for example, Asian trading hours. Thank you.